Good morning. My name is Scott Ruther, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So we are seeing markets that are mixed around the world, but holding up well. In terms of our markets, we have the S&P hovering above 1,800 and the Nasdaq closed above 4,000 for the first time since the year 2000. So we're seeing some pretty impressive action here, Scott.
You think so? You think it's impressive with the move that we've had? I was just looking at a monthly chart because everyone's impressed about where we are as of now. But if you look at the monthly chart of the S&P, if you had a long-term plan, you're making some money. Besides an intermediate plan, besides an active plan, look at the chart of the S&P. This is the chart in January. I actually went over with Jim Cramer on thestreet.com and off the charts. We talked about what we saw here in the 80s, right? 80s, you had a big move. The 90s, the go-go 90s. Then you had this channel here, right? Look at the size of this channel. This is the decade of pain where you had to really actively manage your portfolio to make some money. Then finally, after the bottom, after the financial crisis, you had a red dog reversal right here. You had a higher low, a higher low, a higher low, a nice trend. And then what did we do? We took out the double top at 1576, and now here we are at 1802. Oh my goodness. Let's just flash it forward to where we are right now. Here we are. This was your last, I would say, range to navigate as an active trader or some type of guy trying to create alpha or P&L, where you had a nice engulfing move and then nice little inside days yesterday above the 8th day, above 1800. A lot to like technically.
Yeah, well, what do you say the gold bugs this morning? Because we have gold up a little bit this morning despite a research note from UBS yesterday lowering its 1-month and 3-month price targets.
I wouldn't tell them to start dancing.
Yeah.
It's not New Year's. But, every dog has its day, I guess, and this has been a dog of a sector. So with the downgrade, maybe it gave some people trading gold right here a little bit of initiative to take it home overnight. Because if you look at the GLDs and you look at the metals, let's get to them, you will see that not really much to like and dance about. You've had a downtrend that's been intact for the majority of this year. This is when, in the beginning of the year, it triggered, below 160, and then the macro trade below 150, and then this is where it is. So with that being said, if it wants to try and build something and try and create a new trend, it's got a heck of a lot of work to do. First things first, it has to get above 121, okay, and then above, about 121.70, and then you have 123. I don't want to hear anyone declaring a new bull market in gold until they clear step number 1, and that's take out 123. I'm still not impressed with this trade.
All right, well, are you impressed with high beta tech? Because high beta tech stocks led the market up yesterday. We had Apple finally got going. Been calling for a move there for quite some time, and anybody who stuck with it while it was just hanging in there has got to be happy.
It definitely frustrated a lot of people, and that's what patterns do. Well, that's what the market does. It tries to make a lot of people not involved frustrated. Back in the day, I would have been frustrated and said, oh, Apple did it to me again. Apple did this, Apple did that. It did nothing except for the range get tighter, and it wasn't ready. Then finally, you had a nice 2-day move. It ignited. You look at the chart here. Thank goodness I didn't have to hand in my Samsung phone like we talked about yesterday. If it wasn't going to happen, it's making my Thanksgiving a lot better. Here is that last consolidation. This was that earnings day. Remember that earnings day? It took a little time to work off. It was a decent report, but look what was somewhat priced in, because it has been a heck of a move since the summer. So with that being said, you had a nice trade here yesterday. It cleared this little level here of 529, and now it seems like it's opening up a little bit today. So with that being said, it'll be interesting to see if it can take out 539.25, and if it can, which is the next obstacle. I do think that there are some people talking about 580 to 600 at some point come Christmas time or the first quarter of 2014.
And how about Google? Made a new high at 1061.50. Google's now at all-time highs. Can it keep going at this point?
You know what? It's at all-time highs, so it's rewarding a lot of people. If you're a Google investor and a stock picker, imagine that. You could be involved in a winner in the stock market. It can make you money. If you're a Google trader and you like to watch technical patterns, we had a really nice one. Remember earnings. Earnings came out, big gap up. Look at the chart here. Learn these patterns. Here was your sideways channel. If you guys want to take a little trip down memory lane, remember we talked about taking an option strategy into Google, and I did so with some calls. Anyway, even if you didn't do that, you had your gap up, never came in, big gap showing power. Then you had a few trades along the way, and then lastly was this last little pattern when it triggered above 1,035, and then here we are now at 1,062. Lots of nice action here in Google. If you Google nice action, maybe you'll see Google.
Well, and we've also been speculating about whether Amazon would get a push this week, and everybody getting ready for the holiday season, shopping time, and it tacked on another more than 1% yesterday.
Yes, it did. Now it's up 4 days into the 5th, so I would not chase it. But again, even if Amazon, if you defied every valuation guy out there, because every valuation guy has talked about the high PE, the lack of earnings, blah, blah, blah. Technically, the stock's acted very well, and this is a stock that I don't really engage well. It usually has my number. From time to time, there's good patterns, but overall, if you're a stock picker and you've been in Amazon, I bet you're very happy and you're not a frustrated, stubborn short. Anyway, you look at the pattern here. This was the last little igniting bar. Here's your gap up after earnings. Still held a portion of it, didn't hold the entire thing like Google. Here's where it woke up, nice igniting bar, held above this prior trend line, and here you are. So at this point, you have, 382.50 is your point of reference. I would not be chasing it, but I wouldn't be a stubborn short either.
How about Netflix was able to log in almost a 1.5% gain yesterday. Now, it did close on high, signaling potential upside follow through today. Do you think we can still get a piece of the action potentially today?
I think at some point it's going to stretch. It's been a little harder to trade. It's not the Netflix of old, but like rightly so. You look here and you look at the size of this engulfing bar that scared the heck out of a lot of the bulls here. That's when Carl Icahn said he sold a piece. Anyway, he's been in this since 100, so why not? Anyway, it's been following this little trend line, holding higher. It's trying to break above this little area. Let's see if it might be up a little bit this morning. Your short-term pivot here is 356. Still looks good as it grinds higher. Hopefully you're not just stuck trying to short this because of that bar. The higher we go, the more power it negates from that engulfing horrendous looking candle. But anyway, still acting well. It's just not stretching like some of the others.
And LinkedIn had a nice reversal yesterday. What do you think here? What are the levels to watch?
This one also, it's been in a corrective phase, but you have to put it in stride. It went from below 100 a year or so back, and now it's just trying to correct, and it looks okay. If you approach it as a trade, we talked about this when Facebook reversed yesterday, and you had this little inside channel. So if you trade, again, technicals, and you saw this little inside channel, other social media stocks actually broke to weekly lows and came back above it. This didn't, so this showed you some strength. So now the question is, can it get back on its game? And I still think it needs some time. If you're an investor and you've been sitting in this thing, if you go back to the monthly chart all the way since this beautiful cup and handle pattern way back when, I think just it needs some time. They have a nice business model, and you just have to know the type of risk you get in with some of these high valuation stocks, and entries and exits do matter. And as of right now on the daily chart, day one, let's see if we can get to 229.
All right, coming up, we're going to go in the trenches with the banks. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with the banks, and they seem to be trying to take a little bit of a rest, which, Scott, we've been talking about this week, saying it would be good, it would be healthy action after the kind of move that they've had. Yeah,
because no one really wants to feel like they're chasing. And if you got involved 2 weeks ago when they ignited, that was a good entry, and as they extended, some trim and trail it. And to be honest, for me, I almost trimmed and trailed myself out of a lot of good positions. So I could use a rest, I could use a reset here, so this way I don't feel like I'm getting back in at just an elevated area. So if you look first at, just say, Citigroup, which I think you just mentioned, or maybe not, here it is. And this was a nice little trade right here. This is when we started talking about it last week. Nice little bull flag after coming off of multi-week support, and then now it's hovering above this prior area. So with that being said, perhaps we'll keep this call going so you could see the action in the banks, and a little work above this, what is that, 52.49, and then we could see continuation above 53.69. If you look at the weekly chart of something like Citi, it's just starting to go. So with that being said, I still think there's some upside left in this one.
How about Goldman Sachs? Closed down about 0.8% yesterday. Would you say that, what levels would you say then you would be interested in?
You know what, on this end of the bank move, I feel like this one was the most frustrating. You know, some of the other ones went quick, some led. Goldman Sachs did not lead this bank move, and it's been a little faulty. So if you look at Goldman Sachs, I know we've been trying to, see if it can get above this 169, 170 and extend. It kind of reversed, and it was one of the weakest banks yesterday. So some people might have even got out there. So I would say as long as it holds above 167-ish, it's fine. It's just not as clean as it used to be. Very sloppy. Look at the sloppy action here in Goldman.
JP Morgan slipped about the same, slipped about 0.8% as well. What level do you say it needs to hold for it to remain healthy?
Well, this one at least wasn't as sloppy. It had tradable patterns into yesterday, and there was some technicals to like, if I could speak today. With that said, here was one of those spots to like. You had an igniting bar after the jobs report. Here's where it held higher, and then you had continuation. So yesterday, showed you that it was a little tired. Traded below yesterday's low. I'd love to see it hold above this 56.51, and that'll be a spot that could be interesting.
And Bank of America, the standout, was actually the best in breed with almost a 0.5% gain yesterday compared to, obviously, its peers that lost some. And I know you like this stock, so looks pretty good.
This is my go-to.
Yeah.
I've been talking about it for over a year, since about $8. And recently I wasn't involved, and I got back involved to show how you can navigate these trends. And right here was that area that was very exciting after 3-4 months of sideways action, consolidating a huge move from the start of this year. This was your spot. It's still one of the few banks that I have on. I'd love to see this consolidate and create some kind of upper level flag. Maybe it even tries to come in and test this 1550 area, but overall, a few more days like this, and then perhaps we will see a close above 16.
Okay, time for some quick hits. Let's talk VJET. 14% gain yesterday. Pretty crazy. Was able to close back above its 8 and 21 day. So what do you think now?
We talked about how a day or so before it closed on its highs when the market closed a little bit weaker. I think that was Monday.
Right.
And yesterday, as an active trader, it was a calculated setup, right? If this was the top here, or this was an area that you sold some and you didn't get caught in this mess, and you were looking for some type of bounce, here's where it closed on the highs, and that was your bounce. Right back into the moving averages. I think we even said 43, 44 could happen, and it did. So with that said, I still think there's some more room, but ultimately this stock's going to need some time. It was a very clean, nice new issue back here, gave you a nice run, revisited this area, and now we'll see if there's another trade up into about 45. So just approach that on a 5-minute chart.
All right, Triple D, 3D Systems, has been basing above its 21-day. Would you say this just needs a little bit of time before seeing potentially higher prices?
Well, it's wedging. This was the stock that Monday that flashed a little bit of a caution sign, a little bit of a rest signal. And if you look here, there it is. It was right here. So this was that topping tail after an enormous move that you saw here in the stock. Then it had some follow through once it closed below this low of this doji, and now it's trying to wedge right here. So with that being said, it is a leader type stock. It got hit with that whole group. Nice little inside day yesterday. I'm not sure if it's going to be at all-time highs anytime soon, but there could be some action here. First, it's got to start getting above this 74.59 to get back in motion. Out of all the names, this is considered one of the most high quality.
All right, and Tesla had a nice reversal yesterday. Do you foresee it getting back in motion?
This is trying. This stock changed its complexion a little bit before earnings, and then, and if you took it off into earnings and didn't take the risk, now's the time to maybe look at it. You look at the chart here, this trend was really, really strong. Oh, did I say really?
You did.
I haven't done that in a while. Really, really, really strong until right here. You had a little bit of a flag pattern. Market made new highs. That was one of your signals that it's getting a little weaker. Then after earnings, or prior to earnings, actually it gave you a little bit of a bounce back. So if you didn't take it there, this is where we are now. So with that being said, it's trying here. I know yesterday some people tried to short it, and at first it worked out okay, but you really had to take that trade. And now it's trying to build, I guess, a lower level base. So above this 126, perhaps you get a retracement to 138, but I would just, take this again. This one also, because of that it broke and changed, you should go to a 5-minute to 15-minute chart versus the daily, because the daily's not showing you much yet.
Well, earlier in the week, we've been talking about pockets of weakness within social media stocks. ZNGA, the exception, hovering at highs. What are the levels you're watching here?
ZNGA, let's take a look. ZNGA, sorry. My thumbs aren't working today.
ZNGA. There you go,
There you go.
Scott.
I've never seen these symbols before. Anyway, with that being said, look at the size of this consolidation. This is what, 2 years plus after the breakdown from the Facebook hype up here around 14. So with that being said, I think short term, it's starting to act much better, and that's where it is right there. We talked about this a little bit when it was supposed to clear $4, and it did. Then it held above it, and now it looks like it's flagging again. Sometimes during the holiday season, these little guys get some attention, and in order for this to go to $5, it's going to have to get above 455 and close above it. So we'll see if ZNGA could zing one up there.
All right. Well, Scott, tell us quickly, what will you be focusing on as you begin the trading session ahead of Thanksgiving and Hanukkah?
I think I'm getting the hook here. The building wants us to close down the morning call. So with that being said, be thankful for everything you have. I'm thankful for Brittany and the morning call and everything we do each day. Hopefully you're thankful as well. And I guess we got to go. Call it a day. Have a great turkey.